Okay, so we started the recording. Hi, Elizabeth. How are you? Okay, so we started the recording. Alrighty. So, Kenvry, thank you so much for being here. How are you? And I will be honestly just giving you the call now. We do have a few questions that came in. And so we've been going through the TBX. We've been going through TBX. And this week we finished up the 300 levels and TBX 300. And so there's a few questions that have come in from that and also come in generally. And so we are going to be asking you. So first of all, how are you doing this morning, Kenvry?
I'm super amazing, about to sleep. See, I'm good. How you guys doing?
We're doing good.
You're just eating. I'm just looking. You're just eating. So the reason you didn't want to put your face out is because you're eating. Right?
I was trying to hide my face from eating. So now
That's funny.
That's good. All right, nice to have. It's always good. Culturally that we see your face. I gotta see your face. Makes sense, right? What's happening to? Yeah, now I see Coach Carol. Where is Elizabeth?
He's eating.
Are you still eating? Okay, now your face is there. Okay.
Ready.
I believe Diane is not at work. Our super striker. Diane. Are you at work, Diane?
Diane is driving.
No, I know I'm driving. I'm actually driving in a hill. Well, we're going to Floyd in Virginia. It's Floyd, Virginia. It's a little shop, but we're going into the mountains. So hopefully I don't lose you guys.
Okay. We're gonna record this.
But yeah, I'm driving.
No problem. Yeah, good to have you guys. So I heard you guys have lots. You want to load me with some questions and you want to educate me today based on what it is you guys have learned. All right, I'm full. Let's go.
Awesome. So the first question, we can prepare this time, right? So the first question is from Deanne. It says, when using double blessing strategy, when should you not take a trade? Is there a chart trend pattern we should avoid when learning to take the trade on our own? So when using double blessing strategy, when should we not take a trade? Is there a chart trend pattern we should avoid when learning to take a trade on our own?
Beautiful. Nice. Okay. So I love that question, brings direction. Now, and I love the direction when trying to take trades on our own. The first thing you want to consider is a strategy. The strategy is a discipline. Anything outside of the strategy is indiscipline. Okay. So first is you want to look at the strategy, the formation of this. So we have the strategy, but there's a formation before the strategy, and that strategy that's what makes you a strat technical trader. Now you could only trade you could decide to trade just on the strategy, or you could decide to be the full breed of the strategy, which is you have to check the sentiment, you have to check the trend, you have to check the structure, which is technical analysis that you want to trade. Then before you now look at the strategy is the last point. Strategy is for taking trades, all right? But what trades are you taking? So if I am, and now another thing we brought inside is time frame. So don't allow these things bother you. The first thing is whenever you get the trend of the market aligned with the sentiment, then wherever you choose as a structure, if it aligns with the strategy, you take the trade, all right? Whether it's 5 minutes, whether it's 15 minutes, there's something about accuracy. If you're aiming for more accuracy, then I can tell you you could now start looking at for 15 minutes time frame. But as long as the 5 minutes, you're doing the time frames you're taking the trades on 5 minutes time frame at the end of the day, if a 5 minutes align. So if you're looking for a buy, you must have the trend aligned with the sentiment. It means it has to be a bullish trend. And I believe in the strategy, I believe everybody who's asking this question already know the strategy. So a bullish trend with a bullish sentiment, if I get a green floor or a floor that I analyze through charting, and stochastic and RSI comes to align with the green, all right, and that's it. That's it. The only thing you need after you get your areas, It's stochastic analysis.
Yeah.
Because the floor is your green. What you chart is your green. All right, which is the floor. Arrow is automated after it's an automated thing. The moment you get a sell candle, the next candle is arrow. So you can anticipate the arrow. So whenever you get all those things, you're good to go. Now, when it comes to timing, timing is still accuracy. It doesn't stop you from taking a trade. Right from my teaching, I say take trades when you get a 4 green forex. You want to increase the level of your accuracy. That's when you start adding timing. And it's not just timing. So far, so good. I've taught you guys over the last couple of weeks that we now have not just timing. Timing is a factor. Retracement is a factor. Price action is a factor. Now, I just gave you guys another one. All right, which is also time frame on candles, So there are other things that beautifies, that takes the bar up. That's accuracy. You're aiming for high level accuracy. But if it's about taking the strategy, 4 greens for a buy, 4 red for a sell, and trend must align with the sentiment, period.
So Kenvry, just to let you know, we have brand new people in here too. So maybe you can explain, and they haven't had a chance to go through the TBX. Maybe you can explain what you mean by sentiment, just very briefly. That way, somebody like Winnie, she's brand new here, she may be able to put everything together, if you don't mind.
Okay, good. So, well, putting everything together. Excuse me, hold on. Let me give it some more. Okay, I'm sharing my screen right now. So when it comes to the strategy, just bring out something very clean, very clean. Let me see if I can share that on my screen. Okay. So first thing is, when you get into the chart, you first want to know, what do you want to buy? What do you want to sell? All right. In the market, if the base currency is stronger than the quote, which is the first currency, if it's stronger than the quote. So there are ways you get to know. Whenever you come to your light chart or currency, you want to use currency strength meter.org or whatever you use. Whenever the first currency is stronger than the quote, or you're using market trap, Liberty, right? Which is not live right now because the market is on the weekend. So let's say I want to trade USD JPY. What should I be looking at for in USD JPY? A bullish market. Why? Because USD is stronger than JPY, so the market ought to be going up. It means just the look of this gives me direction of what I should look at in this market, right? So because the sentiment on USD JPY is bullish. Why is it bullish? Because USD is stronger than JPY. And whenever the base currency is stronger than the quote currency, that's a bullish sentiment. What are you looking for in a bullish sentiment? You're looking for buys. You're looking for calls. You're looking for hires, all right? Because you want the market to go up. Not because you want the market to go up. The market is going up. So you want to get positions to follow the market up. That's buying. Now, if you're looking at AUD, USD, AUD is the first currency, USD is the second currency. So if the base currency is weaker than the quote currency, it means the market is bearish. And what are you looking for in a bearish market? You're looking for sell opportunities, all right? So that's the first thing about sentiment. Now, the second thing in the formation is trend, all right? So if I have to go to USD JPY, I have to now check if the trend is a bullish trend, all right? Now that I got the sentiment, if the trend is a bullish trend, it means my bias for buying is going to be legitimate. So I now have to now check, all right? And there are ways I can check. Manually, you could begin to draw trend lines, but that's not going to be correctly accurate because that's going to be based on your level of knowledge. But there are now tools. There's a tool inside of the hourglass. It's called Super Trend. All right. Now the new strategy we're trying to bring up, it's not even going to allow, you're not even going to look at anything. You're just going to see it by the side. You're going to see your trend. It's just going to be so clear. You're not going to worry about that. All right. So, but for you to not know which, so if I go to USD JPY, okay, we even have the market. Oh, the market is open. Like, are you kidding me? So USD is stronger than JPY. All right. So the market is bullish. It means the market is bullish. Now, how do I know the trend is bullish? You see this green line. Whenever it's green, the market is bullish in any time frame. So, and there are 4 time frames that I need to check to be higher. So 4 out of 4, good. 3 out of 4, good. 2 out of 2, no. All right. So I now have to check 4 time frame, which is the 5 minutes, 15 minutes. All right. I have to see if it's green. So this is green, 15 minutes. Another way is if candles are above, it means it's bullish. All right. Then another time frame is 1 hour. So 1 hour also green. All right. And candles are above, it means it's bullish. Then I'll check the daily. So already I've gotten 3 out of 4. That's 4 out of 4. So it means the market is bullish. So this market is good for a buy. That is when I can now move to the next trend, which is the structure. All right. And I want to look at structure. And I've taught you guys 2 things in structure. In fact, I'm adding small, but the major 2 things you look at, boy. First is charting. As a beginner, you now want to chart the market, all right, for buy opportunity. So that is where you can now say, okay, let me break the candles, all right, into what? From the daily, I want to chart it. So you guys have the training on charting where you begin to pick the previous candles. So if I'm charting this market right now, so this is how we go, all right? Because you now want to relate to what has happened yesterday, because what has happened yesterday is what tends to happen tomorrow or even today, all right? The market is a production of its history. So if I'm charting this market, I want to take what? The previous level of the opening of the candle on the previous day, all right? The extension, which is the week, then the floor, then the extension, which is the week. So this represents ceiling, floor. Okay. So in a market, anything below where price is a floor. So a previous candle that has a ceiling, and if market is below, that ceiling is below price, it means that market is a floor. Anything that price we stand upon below is a floor. Anything that price we hit above is a ceiling. So presently right now, you can see that this price is presently at 896. All right. So it means 669 is below price. So that is not considered a floor. Likewise, 994, 133, 994. Likewise, this. So all of them are now floor because price is above. All right. So the next thing is I take it to a 1 hour. I'll do the same for a 1 hour just to get the strongest areas too. All right. So presently right now, this candle, all right, I can do the same thing for this. Okay. Ceiling, floor. This is floor. All right, ceiling. Okay, so that's the previous candle. But now, Kenvry, I am looking for what? A floor. Everything is just marked is above. So what is the next candle that has a floor? So now I begin to now take what? This has a floor. All right, you can see this candle has a floor here. So I cannot, this is how you now determine floors. So I'm not just charting based on chart, I'm giving you. So this was the floor on daily, but price is at 896. It means before 896, there is another floor. Before 669, there is another floor. All right. I could say, oh, another floor. This is a floor. All right. It means this is another floor. It means, you know what is happening right now? I am taking this floor and this floor to be another floor. So this is charting, but I'm now moving in a different dimension. Are you guys getting it? Because you're just looking for floors and anything below price is floor. Now this may be too far away. All right. So you now have to get other floors that the market can hit. Ultimately, price action now have to set in. What is price action? The market would tend to buy the previous ceiling of an uptrend. So we could see here, boom, we have another what? Ceiling. Okay, we have another what? So conclusively, I could say price action wise, this is a very good area that the market will buy when it gets there. All right. So that is a ceiling. This is me adding price action plus charting. So I'm charting the candles, but this time around, I am not just charting the basic one. So basic is You go to a daily, the previous candle. You go to a 1 hour, the previous candle. You go to a 15 minutes, the previous candle. But now I'm trying to now add the feeling of charting. So I'm looking for flaws. So this is a flaw, this is a flaw, this is a flaw. So all these are flaws before the daily flaw. And this is a 1 hour area, and that flaw happens to be a previous ceiling. Now watch out. Now that I get, so this is what they call structure. I've gotten several structures for price to react. All right. Kenvry, do you know which one to buy? No, I don't. You can buy in any one. You can buy here, you can buy here, you can buy here, you can buy here. All right. So what gives you entry? How do you know you're going to enter the market? Strategy. So I've gotten structure, I've gotten the trend, I've gotten the what? Sentiment. Now is strategy is my decision to enter the market. So what price can I enter the market? Two things. I may make a decision based on two things. So I've always said, based on history of my test out, 15 minutes, because I'm on 1 hour, I have to still do that for 15 minutes. Okay, so 15 minutes, all right, 15 minutes is actually stay above. The next kind is actually stay above. So where it's another place for 15 minutes, I could now begin to take what? A floor. So this is a floor, all right? And price actually reacted to this. So two things I would make a decision to do, all right? So actively right now, the most interesting places in this market is the 849, all right, 827, then the 779. So two things I can do is I may sentimentally say something, all right, that this, based on price action that I've learned over a period of time, I am going to choose 775 to 779. That's you choosing the area you want to enter the boss. So what it means is if price comes to 779 to 775, all right, and I see stochastic at green, RSI at green, which is already happened, okay, I'm going to take in the market for what? A 15 minutes. So I'm going to take it for 5 minutes. I'm also going to take it. Why? That area is a 1 hour area. It's a 1 hour ceiling. A market tends to react to the. So that's you choosing where to enter based on the availability of several areas. Now, the second thing is you allow the strategy choose for you. Okay. How do you allow the strategy choose for you? If everything aligns, all right, on the time frame you choose. So I may decide to go on 5 minutes. All right. So let me switch this to 5 minutes. So these are several areas marked out. We marked out all of these areas. Watch out. When this market got here, all right, the stochastic get to the green, the RSI get to the green. Apparently, that was a green arrow. The market reacted. All right. The market reacted. Okay. So the next one is what? This one. See, more market got to this area. Stochastic is at green, RSI is at green. Okay, definitely when the market sold down, it was a green arrow. The market reacted. So that is you allowing the strategy to not choose for you. Now, the next one is after this price, the next price action is this or this. So if market comes here, stochastic is at green, RSI is at green, I see what? Strength stronger than USD stronger than JPY. All I need to do is what? Go on my broker and click 5 minutes. Because I've gotten the area, all I just need is for strategy to align. Stochastic at green, RSI at green, boom, I'm good to go. So this is just basics. This is you just entering the trade based on what it is you charted out. All right. No complication, just allow the strategy to align. As long as strategy align, it falls in any of those lower areas that you charted out. So the basic thing is you charting out, you putting in the work to get these good areas based on either charting or price action. So the more you learn about charting and price action, you're going to now learn to choose wisely the areas you want to take the trade. All right. So it's either you allow the strategy choose for you or you choose. And the safer ones are the one you choose. Because you learn from your choices. You can document that and make choices that these areas I want to enter. I want to always enter at 15-minute areas, not 5 minutes. So that's your choice. And when you see these things accomplish your choice over a period of time, your confidence is going to go up with it. Okay? Does this make sense?
Absolutely, absolutely. Thank you so much. So we wanted to just go through that. Thank you, Kenvry, for going through that. That way, if you see this for the second time, the third time, the 20th time, it starts to sink in. If you're brand new, just know that it's going to take time for it to sink in. So I want to switch gears. There's another question here that makes me very happy because this means that people are going through the TBX or even the Forex training under IM.Center. So this question is from Annie. I don't think she's here, but at least we can ask this question for her. She wanted to understand the difference. And I know sometimes even me, when I read it and listen to it on the IM.center, it doesn't sync very well until maybe sometimes I hear it somebody else saying. So she wants to understand, what does it mean when you're trading? And I'm assuming this is MetaTrader 4, when you have to select the lot size of 0.01. She has it addressed as units, but she's just trying to figure out when trading, when it's 0.01 or 0.01 and 1, what does that really mean? I know I struggled with that, and I think it's important for us to address it here. Just, it's simple once you get it, but if you don't get it in the beginning, you don't get it. Does that make sense, Kenvry?
Absolutely. So there are three major. So when we teach, there is a general perspective of teaching. All right. So risk management is very core when it comes to brokers or trading. So when it comes to Forex, when you have an equity, 1% is a 0.01. All right, like the 1% teaching for a certain equity, it determines the equity you have. So the basic teaching for if you have a $100 account is a 0.01, which is the 1% lot size of that kind of account. Doesn't mean you can. Doesn't mean you that's what you have to trade. No, that's the proper lot size for a $100 account. It's actually representing 1% of your account. Now, if you have $1,000, that's a 0.1. Account are measured in growth is measured in percentage. It's not really the size of the account. So if you have $1,000 account and you're giving a trade, the expected risk is. This is now general management, all right? The expected risk you should use is 0.1, which is a mini lot size. A micro lot size is for account lesser than $1,000. A mini lot size account at $1,000 to $9,999. That's a mini lot size. A standard lot size are from $10,000 and above. That's a standard lot size. So we have standard 1, we have standard 2. So depending on the account, if you have a $100 account, that is micro 1. Micro 1, I have micro 2, I have micro 9. So that is between $100 and $900. All right. So that is just you putting a percentage, all right, on the account. So let's say a trade is given. Now another management is now the risk to reward management. Risk to reward management says your target as to your risk, okay, your reward as to your risk. So let's say a trade is called and my account is $1,000 and my risk, I'm not, based on my past personal management, okay, I want to risk, I'm always willing to risk 3% of my account, okay, so 1% is mini, all right. Now this is it. If I do a mini loss size on $1,000 and I'm giving a trade that is $30, it means that's 3%, 30p stop loss. So the stop loss will determine my loss, my risk. So if I'm giving a trade and the trade is 30p stop loss and 60p take profit, that is risk ratio 1 to 2. It means I'm giving out 1 to get 2. But that 1 is actually 3% of my account because $30 out of $1,000. Because if I do 30p is $30 if I use a mini. So that's $30 out of $1,000. That's 3%. It means if I lose that trade, I'm going to lose 3%, which is pretty good. All right. Now, if I use a mini 2, it means I'm going to lose $60. That's 6% of my account. So the stop loss that determines my risk and the lot size I use. Okay. In other situations, so let's say my account is $100. All right. What am I supposed to use if I don't want to lose more than 3%? Okay. I cannot use more than a 0.01 because that's $3 out of 100%. So that also puts me in the risk. But there's another side to this. So let's say the stop loss, all right, is 10 pips, and my risk is 3% per trade, and I have $100 account. Okay, it means if I lose, what would I lose that will not be more than $3. If I use a micro, which is a 0.01, and it's a 10 pips, I'm only going to lose $1. So it means I can use a 0.03, all right, which is, if I lose 10 pips, it's going to be $3. So in $100, because of my risk to risk, which I can reach 3% of my account per any trade. That is my own management. So if I get a trade that says my stop loss is 10 pips, I can use a 0.03. So it doesn't keep me at 0.01 because that is general lot size. So I could use a 0.03 because what I'm going to lose is just $3. All right. So that way I still stay within my management for that trade. Am I making sense? Proof 5. So that determines what risk I can use. My stop loss can actually determine my risk. So in the same case, let's say the stop loss is 50 pips. All right. That goes beyond my risk management for 3% per trade. That means if I take that trade even at 0.01, I'm going to lose $5 if I lose that trade. So that goes beyond. So you see, now I'll make a decision to take that trade or leave the trade. All right. So if it goes beyond my risk for per trade, I'll leave that trade. But let's say I now have $1,000. I'm supposed to use a mini lot size. And my goal is not to use for any trade, not to use 3%, not to use more than 3%. And now I'm giving a trade that is 50 pips, which means if I use a mini, I am going to get $50. So I can now reduce my lot size from 0.1 to 0.08. All right, or 0.07 point something. That if times 50, no, that's 0.06. Okay, probably 0.05. I think 0.06. Yeah, 0.06. Because per any, in a 0.06, per any times 50 pips, that is $30. So that way, I'm also in my risk management, but I reduce my risk as to what I'm supposed to use for $1,000. So this is the risk, is the stop loss that now help me know what lot size I should use, not the equity. See the difference? All right. Generally, it's the equity that helps you know what lot size. But now, in proper trade management and risk to reward management, is the stop loss that determine your lot size. Because it's what you must be willing, you must know what you're willing to put in the trade for what you want to gain is the first point of action. You must be willing to know what you gain. Because the truth is, you already lost at the moment you take that trade. All right. So it's either it comes or it doesn't. So that is the case in point. So somebody can have $1,000 and use a standard lot size and also be within their risk based on the stop loss. So there are some trades on steady, all right, that they'll give you 6 pips stop loss or 10 pips, right? And your goal, you want to risk, let's say, 5% or 10% for that trade. So 10% is $100. If you use a standard lot size for 10 pips, it's $100. So it means you could use a standard lot size in $1,000 account based on the fact that you already said you want to risk what 10% of your account for that trade. So that way you're not going to lose more than what you say you want to lose. So those are tools that guides your risk. Does this explain anything good?
Yeah, wow. Okay. So let me see if I understood. At the end of the day, it is really not the lot size that you're worried about too much. You are still worried about the lot size, but you have to look at where is the stop loss.
Yeah, that's it. In a trade, what you worry for is what is the stop loss, because that's what gets to your account if it's negative.
If it's negative. So if it's BTC, some of you, this might be gibberish right now, but just know if you hear this over and over and over, it's gonna make sense. So if it's Bitcoin, every pip is just every movement of the Bitcoin from one price to the other. Now, if the lot size is, if the stop loss is 30 pips.
There's no 30 pips in Bitcoin.
Huh?
There's no 30 pips in Bitcoin, 300. Now, this is how Bitcoin works. Sorry to cut you. Bitcoin is dangerous when it comes to calculating. Yeah, I know some of you don't know how to calculate Bitcoin yet, but you guys are trading it because you're doing copy and paste. Now, the numerical order of Bitcoin indices, stocks are different from Forex pairs. Okay. So 100 pips in Bitcoin is a 10 pip in normal Forex pairs, in normal brokers. Okay. In some brokers, so in other words, a micro lot size in Forex, in a micro lot size in BTC is a standard lot size. It is a mini lot size in Forex. All right. Like it now depends on brokers. So some brokers have money like Hugo's Way. If you're trading a mini in Hugo's Way, you're actually trading a normal lot, standard lot size if you're trading Bitcoin. Likewise, gold. All right, because they are times 10 of the normal pips. So if Bitcoin moves, you calculate the Bitcoin move 8,000 pips. So let's say if the price moves from 21,000 to 22,000, that's 8,000 pips in calculation. All right, and you see that if you take it on a 0.01, you probably made 1,000 pips. You probably made so depending on the broker. If it's a normal Forex calculation, 1,000 pips is supposed to, on a mini, is supposed to be $1,000. All right. But if you use a mini in your broker, you probably get $100. Okay. You probably get $100 because what it's calculated is 1,000 pips is actually 100 pips in Forex. So if it's a Forex, there are brokers that are just for crypto, and brokers that are for indices, like Hugo's Way, they are measured in volatile pairs. So if a trade moves 1,000 pips in Hugo and you use a mini lot size, you get 1,000. You're getting $1,000. You're getting $1,000. Are you? Yeah, you're getting $1,000. You use a standard lot size, you're crazy. All right, it's crazy. You can't and use it now. If you use a micro on Hugo's Way, it's like almost using a mini in your normal brokers when you're trading Bitcoin. Okay, so if you're gonna get $100 if you use a micro. All right, in Bitcoin, you're gonna get $100. But if you use a normal Forex broker, you're gonna get $10. Okay, so it depends on the broker. Now, some brokers cannot, be explained, but I do know about Hugo's Way. Hugo's Way could move 1,000. That's from one price to another price, maybe 1,000 pips, and you get $100 on a 0.01. That's micro. All right, use a mini, that's 1,000. Like use a standard, that's that. All these things you guys are celebrating. If you're trading on Hugo's Way and you use a standard lot size, man, crazy. Some of you will be thousands of dollars, 10,000, 15,000. So that's Bitcoin. You have to do the multiplication times 10 whenever you're relating it, or divided by 10 whenever you're relating it to Forex, or this explanation of pips I just gave to you guys. Does that make sense?
Yeah, it makes sense. I do know there's obviously a difference in the way we calculate pips. What I was getting to is when you're looking at your stop loss, that's where you're going to determine how much am I willing to lose. And so you have to adjust. This is now me trying to repeat what you said and correct me if I'm wrong. So you look at the stop loss, how much movement am I looking at versus what lot size you decided to pick. So yeah. So those things are super important, not just the stuff. When I started out, obviously everybody starts out with just, clicking 0.01 or 0.10. I never realized that there's a difference. You have to also look at the stop loss to figure out, okay, how much am I really willing to lose on this trade if it goes the wrong way?
Yeah.
That's why people blow accounts.
That's the reason many people blow accounts. They're just looking for the profit, or they say, oh, this thing is always accurate, but they don't know what they're putting in. All right. You must be, there's a rule. Do not be willing to gain what you cannot afford to lose in trading. It's a golden rule. So first thing you must be aware of, what are you losing for this thing you want to gain? Is this something you're willing, all right, to lose? Do not be intimidated by people putting out money. Oh, I got $2,000, $3,000. Don't allow money. Don't even allow Jenny to intimidate you with the money she's making. All right. So yeah, she is aware of what she's willing to lose. You can't beat her awareness if you're not aware. So the just know this. All right. I know one of the things I told myself was, I'm not making $10 today doesn't mean I'm not going to make $10. I just need to grow up to where I know I can lose $10 so that I can make $10 easily. All right.
Awesome. So if you guys are wanting to get more information on all this that Kenvry is talking about, it's actually under im.center, under the academies, and then you're going to select the Forex training. It's all in there, but honestly, it sounds better when Kenvry says it. It's like, oh, finally it's sinking. So like Coach Rose was saying, you have to listen to this over and over and over. Don't think that you're not getting it. You have to almost listen to this over and over and over to get it, at least for me and Coach Rose, obviously. Yeah. So the next question is very quick. That way we can cover the rest of them. The other question is there a correct time for trading to make profits, morning or evening?
I think it's going to vary based on the person for me. There was time I used to trade 4 p.m. and I was still accurate. There was time I moved it to the, it depends on, now there is volume. You have to check where there is volume. Our kind of strategy is different from millimeter strategy. All right. That is why millimeters, if she moves from her timing, she's inconsistent. If she moves from her timing, she needs consolidation for her strategy to move well. I need momentum for my strategy to move well. So our strategy works different. So if someone who's trading consolidation, you need the market to be stiff. That's 5 p.m. I'm talking Nigerian time, when there is no volume in the market, when the market is deciding. But when the market is open, full-fledged volume, the banks are open, which is 7 a.m. in London time. London session, 7 a.m. London time. All right, and 1 p.m. US time, not your US time. Okay, in our time is actually 1 p.m., which is 1 p.m. WAT is actually around 8 a.m. Eastern Standard Time. That's when the US market opens. Then I think it's 1 a.m. London time is 1 a.m. EST, then 7 a.m. I think something like that. Yeah. So those are times. The New York and the London session are the times volumes are in the market. London is the highest volume, has the highest volume, while New York has. Then we have the Asian time, Sydney and Tokyo, which make up the Asian time. So these are, you see these times right about now, where we are right now. These are when the overlap and into the Tokyo session, the Sydney session. You know, the volumes are not much. So and it depends on the pairs. The pairs that will be moving then are the AUDs, you know, NZDs, because these are now, you know, in the Sydney session. The volume is not much. So that's why you're seeing short consolidation, sideways movement. All right. So if you trade this time, expecting our strategy to really move in this time, it's not going to be as fruitful as when it's really the London or the New York session. Does that make sense? So it not depends. So, and early in the mornings when the markets are just open. So you have to just check the volume. When there is volume in the markets, London and US. Then Asian, the full time of Asian, all right, that's, you're not looking at the AUD, JPY, AUD, USD, they move in Asian session. All right.
Thank you.
So you could just look at Forex timing.
Yes. So yeah. So if you're not aware, there's so many different strategies of trading. Kenvry and Onadipe use double blessing strategy. So he's really addressing double blessing strategy. There are so many other strategies. So if you decide to use maybe milli-mill strategy, then you'd have to really figure out and attend her classes to figure out like when it works. For me, I've had more success obviously with double blessing strategy, and I decided to just learn one strategy and stick to it and figure out what times work best. So I have another question here. And I don't know if we addressed this. Deanne, did we address this question on peeps when we talked about the lot sizes?
No, we didn't.
Okay. All right. So her question is, pips and pricing is another question. I just need to figure out how to ask it. If my goal is 4% growth, how do I price the amount in a trade? When the trade states 15 pips, do I need 15 pips to the zone action or exit 1 or exit 2? Deanne, can you ask this question? I don't know if
I got
you got it. Okay, all right.
I got it. All right. It's about your target. Okay, how do you choose the zone based on your target? If I'm clear, right?
Is that right, Deanne?
That's right.
Perfect.
Good. So that is it. Also, it's actually answered in the last question that I asked to do with pips. You know, you must stress. So I dealt with more of the risk. The next thing is the reward. So if you know what you're giving to the trade, it's actually also going to affect your reward. All right. So because what you're is both ways. The pips you choose will affect your loss and will also affect you if you gain. So so let's say they give a trade TP1, TP2, TP3. You have to know the pips in TP1, TP2, TP3. And that will now help you calculate the lot size. Okay. So if I'm aiming for 3% a day and I'm using after my risk to reward, and I see that I have to use a mini one. All right. It means if my goal is to gain 3 pips, 3%, if I'm using a mini, that means I'm going for 30 pips. All right. So if TP1 is 100 pips, all I just need to do is set 30 pips. I don't need to get to TP1. I just need to get my target out of the trade before it gets to TP1. All right. So you have to know the pips. So you're not just the one setting TP. You are the one setting. So a trade may be called, and the trade is 100 pips, and your goal is 3%. What is 3% of 100 pips? You are the one through the pips and the lot size you use. So after you know your risk to reward, so that's the first one I dealt with. All right. The stop loss will determine your risk. So, and that risk will determine your target. It's not your lot size. It's your stop loss that will determine your lot size. Your risk is your lot size. So if I get a trade that is called and I was giving a stop loss, all I just need to do is what lot size am I to use if I only want to risk 3% for this trade. So it will now determine your stop loss. Now, your next thing is you're giving a target of TP1, 100 pips, TP2, 300 pips, or TP1, 30 pips or 20 pips, TP2, 50 pips, TP3, 100 pips. Now, if your lot size is, let's say, a standard lot size, and a standard lot size means you're getting, for every pip, you're getting $10, and you're giving 20 pips. It means 10 times 20, that's $200. Okay, so if your target is 3%, is that up to your target? No, it means you have to now choose the higher one, that is 3%. Because 3% of $10,000 is actually what? $300. So you have to now increase. So TP2 may be 50, but you cannot take 30 pips out of it. All right. So people are setting TP1, you're actually setting TP1 plus. You can choose your lot size, or you cannot do 2 trades choosing the same. But don't forget, a lot of people repeat trades. And that's another thing I'll talk on. A lot of people duplicate trades, but they don't know they're actually duplicating their risk. If you notice how I teach, I'll tell you I've gotten this zone, so I could half my risk into 2. So I'm supposed to use 1%. I'll divide 1% into 0.05. It's the same trade that I am taking. It's the same risk. But what I would have done is that I can take TP1 in Forex and I would leave the other one to run to TP2. That way, same risk, but I got 2 different results. All right. So that is one of the things I've done. I used to do. I do in Forex. You could break your risk. That 1% could break it into 2. All right. And so if TP2 is 50 pips and TP1 is 30 pips, it means that's 80 pips in total. If you broke the 0.01, all right, 0.1 into 2 places, that's 80 pips if it hits target. So you are getting $80, all right, as against you just taking TP1. Do you guys understand? That's management. So one is left to travel farther, but it's still the same risk, but it's left to travel farther, and that will give you more money. And by then you would have broken even. So you cannot lose when it comes back to take you off, because you would have broken even when it gets to TP1. So you break even. What is break even? Move your stop loss into 2 or 5 pips in profit. The moment TP1 hits, go move what? The stop loss of the other into profit. So let's say, oh, how about TP3? You could also break that 1%. That 1% into 3 places. It means 0.03, 0.03, 0.04. 0.04 could go for TP1. 0.03 could go for TP2. 0.03 could go for. So that way you risk. All right. That way you risk 1% into all 3. You make money. That's how you make money. All right. So it means that 1% you risk, you don't even have to bother. You only risk 1%, but you got all the TPs. All right. Does that make sense? That's another thing as you're growing, you're going to start doing. Okay, that's risk management. It helps a lot. You may not master it now, but as time goes on. But don't just say, oh, the trade they gave TP1 and you're just pressing 0.01. You're just using the same risk. You're not considering your stop loss. You lose more than you should. Okay.
Wow.
All right. So there was a question that was asked as regard when I took the first one. So what Coach Carol asked, would you recommend using different brokers based on the types of trade? Absolutely yes. All right. So it's dangerous to have your portfolio in one for different trades. So you have swipe coin, you're trading it in steady. It doesn't make sense. You don't know you're growing. There are different platforms. Okay. You don't know your progress. I love to trade to know my progress because that's how I can duplicate. So you have to know if I'm taking swipe trades or if I'm taking steady, I have an account for steady. So that way I know it's steady that gave me a result over a period of time. If I'm taking an account on SwipeCoin, I know that account is for SwipeCoin because that is, I know that SwipeCoin is feeding this account. So let's say you're having conflicts. Steady may be giving you wins and SwipeCoin is taking you losses. How do you know which one to refrain when they are all in one account? You wouldn't. So that way you may make a wrong choice of, okay, I don't want to do this one again. But when you know that's one account, so you can divide your portfolio. So you have a $10,000 account, give 3,000 to steady, give 7,000 to Bitcoin, so that you know that this one is what I'm taking on Bitcoin, this is what I'm taking on Sidecoin. All right, that's what I do. I have different accounts for different purposes. So nobody's going to tell me. I know which one I'm losing because I like to trust an account. Is steady going well for me? It's not going well for you, quit it. The swipe not going well for me. That's the only way you would know because you have a separate account for it. So they call a trade on this one, you go take it in account. They call a trade on this. If it's going up and down, you don't know what you're not learning. All right. You have to learn. You have to, that's why you have to master a product. You may use different when you start, you may use different tools when you start. But at the end of the day, we're pushing you to manage just a few. And the only way you're going to know the few is when you really take data on them separately. Okay. I just wanted to touch on that.
Awesome, awesome. So that is the end of our call. Any feedback from anybody?
I don't know. Can you guys hear me? I'm outside.
Yes.
Okay. I just want to just say we are so grateful for Kenvry and, the team in general, the main team in general. This is something we're all doing in the kindness of our hearts. And we really do appreciate everybody who's in our team. And this is a blessing, having Kenvry as our number one trader, taking his time, his sleeping time to come and teach us what, all the questions. So I just wanted to put it out there, you guys, man, take advantage of the fact that we are here to help you guys and try to come, try to take time out of your time to just come and learn. You have this thing, you're not paying for it. It's free. We are giving you guys this opportunity to come and maximize. So just wanted to put it out there for you guys. Thank you.
Yeah, thank you, Coach Rose. Yes, I agree. Like even for Kenvry coming like on Wednesdays and coming on Saturdays. We just want to thank you because it's not part of the academy. This is just being a servant, that servant leadership, and we do appreciate that. Kenvry, thank you so much, and also Coach Jenny for putting that up for us. We do appreciate you, and yeah, we'll make sure to always show up because this is not to be taken for granted. Thank you so much.
All right. Thank you guys for learning. I'm going to run right now. Thank you, Jenny, for having me. It's a privilege always. See you guys. Bye-bye.
Thank you, Kenvry. So before you log off, I just want to say this. It's very, very true. This is not part of the IM Academy. It is not. It is just out of the courtesy of Kenvry, out of the courtesy of all the leaders within this organization to put this call together. This is not something that is part of the package that comes with IM Academy. So please, please take advantage. 99% of, actually 100% of other teams don't have access to Kenvry. They don't have Zoom calls throughout the week. And so, you know, take advantage of this and run with it. We are very, very, very blessed to have this. And so, you know, I really appreciate everybody that is here to learn. And please, please, please take this and run with it. It's absolutely important to us that you guys are successful, knowing that so many people are taking time out of their family's life, you know, Coach Rose, Coach Carol throughout the week, me, Kenvry, to come and make sure that you guys are learning and being successful at it. I don't know if anybody else has any feedback, anything else that anybody wants to say?
You know, I'll just say thank you to all your coaches. You know, you guys do a lot. You definitely go an extra mile for all of us, and we do feel the love. Kenvry, we can't thank you enough. Thank you so much for all that you do. My other question is, when do you all sleep?
We don't.
That was just my final question. I'm like, okay, so what is the sleep schedule gonna look like? You know.
So I'll tell you a little story, and this is just to inspire and hopefully not to scare anybody. So when we started this thing, there's 3-4 musketeers here. When we realized that we hit the jackpot with trading, we were getting up at 3 a.m. I mean, Coach Carroll still does it. We woke up at 3 a.m. to be on a call with Kenvry because his schedule was 3 a.m. I don't know how many calls he had at 3 a.m. I don't believe he had the 8 a.m. when we started out. I don't remember very well. All I knew is we were hungry. And I swear we would get up at 3. Coach Rose would still have to go to work and have children. And we just wanted to learn. We were just so hungry. I mean, it was ridiculous. And I don't know how long everybody did it for, but I did it until I understood what he was talking about. And I'm telling you, I was in tears and mucus coming out of my nose when I couldn't nail it. I was struggling charting by myself. And I told myself, if these people can figure it out, I'm going to figure it out. And so I told myself, I'm going to get up. In fact, I remember Elizabeth. I think Elizabeth would stay up and watch the 1 a.m. call with Onadipe. She would stay up. And don't forget, she has a job the next day. So it does take sacrifice. Now I sleep regular, but I'm telling you, I don't remember if it was 2 months or 3 months. I wanted to be on. I wanted to hear him when he's saying the words right there. And the beautiful thing about going into a live session is the fact that you get to take trades with them. So you get paid. Before the chicken is up, you've already made money is in your bank, right? So in the beginning, I sacrificed. Everybody here sacrificed. The original people, we sacrificed. And I know a lot of you guys, there's so many people here that are still waking up in the morning to sacrifice. I think even Bilha was getting up. I don't remember if you were getting up, Bilha, too, early in the morning in the beginning, because you're really good at trading now.
Yes, I did. I was getting up very early.
Yeah.
And I still do sometimes.
Yeah. And she's good at trading. And it does take a little bit of a sacrifice. So I don't know if I answered your question. Right now, people's schedules are, we do have people that obviously work night shifts, so they do take trades at night. So yeah.
But it's inspiring. I mean, I'm a morning person, so I do see all the swipe things at 3 a.m. because I go to the gym at 5 every day. But that's just the way I am. But now I'm tweaking it because of because I want to be on live with Kenvry, some of the 4 to 5s, so I don't quite make my 5 o'clock class. But I think it's really inspiring to, like today, the way he explained the percentages, like the 0 to 900 and then 1,000, like that clicked to me, like in a different way than it did before. Yeah. But it's because I did those sessions of TBX, or the ones you gave us homework. I did all of them this week. So today, it literally, like I was like, oh wow, I get this now. It's funny, but it clicked today for me. So we'll see how it goes from here.
Yeah, absolutely. So Katu, thank you so much for saying that, because I'm telling you guys, especially the brand new people, you're gonna hear like it's French in the beginning. You're like, I'm reading this thing, it doesn't make any sense. But you have to go through it again and again, and then you hear it and you hear it and you hear it. You're like, it clicked. Even for me today, I wrote down notes that something else clicked. So don't give up. Don't give up.
Thank you again.
You're welcome. Anything else? Anybody else with any input, any questions? We're here to help you guys out. We don't want you going through, I think on average, it took us about 2 to 3 months to really understand how to trade, but you guys are literally within 2 or 3 days of putting in your money into an account. You guys are really literally knowing how to trade. Even though you have not practiced, you're literally knowing how to trade without spending 3 months of your life. So that's what we want to do. We want to just cut the training time for you guys. But please understand, when we show you how to do something, you have to practice. You have to go back into the recordings and re-listen, over and over and over and over and over until it makes sense. So none of us listened to something the first time and we clicked. For me, especially, I was listening to videos 20 plus times. So, okay, so I think that's it. If any of you guys have anybody coming in for the opportunity call, make sure they're jumping in right now. Otherwise, God bless you guys, and make sure you're jumping in with your full name. That way we are admitting people into the call, because sometimes I don't publish the YouTube depending on what has been said in the call. So I want to make sure that if it's a call that stays private within our team, only the team members are on here. Thank you guys. We have so many Sarahs. It's amazing. Sarah Ngugi, Sarah McIntosh,